Board has backed fellow Australian resources company Mineral Resources takeover offer. The offer values OR at 83 cents a share, or approximately $526 million. The new valuation is an increase from Mineral Resources' previous bid of 80 cents a share. Yesterday, OR's share price rose to a two-year high, reaching 89 cents before ending the day's trading at 88 cents, lifting the company's market cap to $532.62 million. Mineral Resources' approved offer consists of a scheme of arrangement comprising 41.5 cents in cash and between 0.0198 and 0.0277 Mineral Resources shares per OR share. OR shareholders will have the option to receive either 100% cash or 100% scrip, with allocation subject to scale back to ensure the total consideration paid is split evenly between cash and scrip. OR Chairman Kenneth Williams said the Mineral Resources offer is an attractive one. Shareholders who receive Mineral Resources shares can choose to remain invested in the larger and more liquid Mineral Resources, or they can choose to sell their new Mineral Resources shares for cash, Mr. Williams said. New Zealand's economy expanded in the third quarter, albeit at a slower pace, as ongoing weak activity in the primary sector offset a strong recovery in construction and growth in the services industries was softer. Gross domestic product expanded 0.6% in the 3 months to September 30 versus a revised 1% expansion in the June quarter and was 2.7% higher on the year, Statistics New Zealand said on Thursday. Economists had expected GDP to expand 0.6% in the quarter and 2.4% on the year, according to the median in a Bloomberg poll. The New Zealand dollar rose to US 70.12 cents flat ROMU S6975C immediately before the release. While the 0.6% quarter-on-quarter growth was in line with forecasts, it was actually better than expected given the revision to June. Construction activity recovered this quarter, unwinding the previous 2 quarterly falls, said National Accounts Senior Manager Gary Jewett. Stocks drifted lower in early trading on Thursday, as foreshadowed by the futures market, with traders taking a lead from a lackluster U.S. session. The S&P/ASX 200 index lost 6 points, or 0.1%, to 60.69, while the All Ordinaries slipped by the same point and percentage amount to 61.61. The Australian dollar traded at US 76.66 cents. Miners were stronger after commodity prices climbed in overnight trading, with BHP up 1.4% and Rio Tinto higher by 0.6%. BlueScope jumped 5.2% after upgrading earning guidance to reflect higher steel prices and volumes. On the downside, CSL lost 0.9%, NAB slipped 0.7% and ANZ lost 0.6%. Retail Food Group rose 3.4%, taking back a tiny fraction of recent heavy losses. The stock shed 63% of its value in less than a fortnight, after Fairfax Media published a series of articles revealing that RFG's sharp business model was driving some franchisees to the wall. New Zealand's Overseas Investment Office, OIO, has torpedoed the Chinese HNA Group's proposed NZ$660 million acquisition of ANZ's asset finance and investment business UDC Finance as flagged by the Australian Financial Review's Street Talk column on December 1. The Overseas Investment Office, the equivalent to Australia's Foreign Investment Review Board, has not explained why it has knocked back the Chinese conglomerate's bid but is expected to make an announcement later today.